stocks on the rise today. One sign has bulls charging back. Well, it's this bunch of stock buybacks we've seen of late. Buybacks by S&P 500 companies totaled $137 billion last year, which was just 28% of operating profit. Now, the last time that number was that low, the S&P 500 climbed for the next 4 years. Joining us now is Jack Ablin. He is the Chief Investment Officer at Harris Private Bank. Jack, great to see you. So you were actually quoted on this theme in Bloomberg News this morning, and you sounded a little bit skeptical that this amount of stock buybacks would continue to fuel the market rally.
Well, yeah, Lori, I think that there are really two sides of it. One, there's certainly what I'll call the sentiment side of it, and I rejoice in the fact that business executives have enough confidence to buy back their shares. There's certainly no question about that. However, if you do look back over time at buybacks collectively, you'll find that they generally aren't great timing tools. So I wouldn't look at this buyback as some new indication that all of a sudden stocks are remarkably cheap, and if management's buying it, we need to be buying it. Generally, like I said, it's a better indication of sentiment, which tends to be more of a contrary indicator than a valuation indicator by itself.
Now, Jack, what do you think of this recent bull run against the backdrop of a still early-stage recovering economy?
Well, I mean, and Lori, I think we're, you could argue that we spent the last 7 or 8 years living beyond our means based on, private debt and spending money that we borrowed from others. Unfortunately, that now has moved from the private sector to the public sector. So at some point, we're going to have to not be able to spend $1.2 trillion or $1.6 trillion more than we take in, and we're going to have to move back to what I'll call a stable state economy. But until that time, we have an enormous tailwind, and we're going to ride it.